Good morning. Just doing a bit of a Bitcoin market update since it is now Monday the 13th. We are 1 week away from another US holiday on the 20th and President Trump getting inaugurated. So expect some craziness from now till then. And remember that historically, after the inauguration, at least for the last two cycles, Bitcoin has had a major move directly after. So, looking at the local stuff specifically for this week, Tuesday is PPI data. Wednesday is CPI, and then Thursday we have initial jobless claims and core retail sales and retail sales. So the big thing here is this is all 1 hour before the New York Stock Exchange opens, so expect pre-market movement Tuesday, Wednesday, Thursday, going into the end of the week. Looking at the long and short ratios, even low time frames, actually we'll look a bit higher going over the weekend. So it actually went back towards the low 60s going over the weekend structure, but as of this morning, since we've been nuking, obviously the market's going down. What are retail traders doing? They're trying to long. So now we are at over 2 to 1 long to short. This is getting more aggressive as we are dumping currently. The funding rates are actually coming in relatively decent. We're at negative funding rates, so this is bullish, just slightly so, but definitely bullish. The big thing here is as this is pushing the price to the downside, the expectation is that we're waiting for some higher lows and some sustained negative funding rates to potentially build some bigger positions going long. Until any of that happens, you have major priority down until proven otherwise. On the liquidation side, we're starting now to break into that big chunk of long liquidity that exists from 90K towards 85, 86K. So we can easily get back into these lows at 87, 86. I don't want to see sustained price action underneath 87. Getting wicks down here is fine. Getting below that and bearish retesting anything that from what we did back in, mid-November starts becoming very, very critical for a much deeper, painful move back towards 76K. What do we have at 76K? Well, that is a massive CME gap, which exists effectively from 80K to 76K, and it could be filled if we do this liquidity grab and then fail to regain levels that we've lost. So with that, looking also at the order block or the order book for this zone, we do have some long stepping in, but nothing really aggressive, and it's a relative dead zone from 90K to about 89K, and even down towards 88K. That being said, as well, if we do see some local gains, there is some interesting things at 92.5 where we could be seeing underside retests for continuation moves to the downside. Understand we've now created macro new lows, lost levels, and this was a perfect move done from the weekend. Why was it perfect? On the open, the New York Open or the UTC Open this morning, the first thing we did was to run up to grab all of the weekend short liquidity, sneak past the highs, do a close back below, and then it's been nuking off a cliff since. So keep an eye on that. Make sure that you're not effectively longing aggressive and early until we actually gain something back. So looking over at the charts themselves, let's look at specifically, just to give you a screenshot, that's fine, of the overall plan. The downside move from what we've done in the lower time frames, we're still losing levels and closing below. There's nothing attractive here for any type of regain until something is significantly gained back. Even on lower time frames, you've got priority down. Even on the 1 minute, you've got priority down. What starts to change this? Well, on the low time frames, you'd want to see something sustained basically above this little block loss. So something that gets you above 91.3 and validating those local positions, that's the best thing to gain back in order to potentially move back higher. So you want to see that move to go back higher, and then potentially any gain from this structure here is what's going to get you back up to retest the Friday open, like the pre-weekend stuff. That's all fine and dandy, but we are still losing levels going lower. There's no evidence yet that it's breaking back the upside. Gaining back 91.3 on the very low time frames is that kind of first evidence. Until that happens, you've got pretty strong aggressive moves to the downside. You've got some pockets below us, but realistically, it starts getting very, very thin. The higher time frame, even though the weekly closed good, that's fine. If we get moves that start to break below 90K, we should potentially see a flush right back towards 87 and 86K, where it starts to thin out liquidity wise below that. So the number one thing here is don't fight the downtrend until we get confirmation of reversal. You're losing levels and bears are retesting them. We've been really aggressively moving lower all morning. So until that changes, be very cautious and skeptical of longs until that reverses. Long shorts are 2 to 1 long to short. For us to start breaking out of that, we would want to see something pretty weird and similar to what we saw last Thursday with that massive move up that was like a 13 candle upside drive on the 1 hour, which started to trap some major shorts. We don't see any evidence of that. There's no higher lows put in yet. So again, follow the priority until we actually regain anything of value. The number one thing is yes, you're in a downtrend. You've broken things and going lower. The recovery from last week looked good until we had Monday, Tuesday, and then by the time Tuesday closed, it was done. There was no effective hold of any important level. We're at support here. Technically, this is a higher time frame support at 90K. Any loss of this low that we're doing right now at 90K, I would expect us to make the next major move down towards 87 and potentially 86. So that's that. Take it easy, and I will catch you guys tomorrow.